Okay, so we did the first 2 exercises. So we should be ready for number 3. So we talked about last week, like the different cost flows for manufacturing. So in this case, we're actually going to look at doing an income statement. So it actually gives us all of our different costs on this one. So this one's actually not too bad as far as we won't have to balance anything until the end of it when we actually look at the different inventory accounts, okay? So again, we can use our notes on some of that to kind of look at how the cost flows are going and everything. So it just tells us the following events took place for digital by marketing or manufacturing company during March, the first month. And then it gives us A through I, you know, materials they purchased, labor, factory overhead, what was sold, what was, you know, selling and administrative, all of the fun things. So we're going to take all of these costs and put them into an income statement structure for manufacturing. And a very, as you can see, a little simple one. And then we're going to look at inventory balances as well, okay? So again, when we're looking at keeping track, I am going to write on the board like the inventory accounts. That way, as we go through and put them in the income statement, we can also kind of keep track of our inventory as we go, okay? So again, the difference in manufacturing as opposed to merchandising is we have 3 inventory accounts, okay? So we're going to have like raw materials, we're going to have our work in process, and we're going to have finished goods. So these are all inventory accounts. So they're all current assets. They all increase on the debit side and decrease on the credit side. And they told us in this case, in this company, this is the first month of operations. So we don't have any beginning balances in any of these accounts. So that makes life easier. We don't have to start with anything. Yes, sir.
My Cengage did not work.
Did yours expire too?
Yeah.
Okay, I'm going to add you to my list.
Okay.
Sorry, yeah. I don't know what's going on with the codes. So if y'all can check and see, I think sometimes it'll tell you if your code's expiring. Sometimes I don't think they are before it expires. So if yours expires, just send me an email and I'll try to take care of it ASAP. So I don't know why they're technology, right? So sorry about that, but yeah, we'll try to get that fixed as soon as I can. I'm going to email between classes, so. But I was telling Sheree and Isaac, because theirs did too, that I'll just hopefully I'll get it fixed today, and then if I need to, I'll just send you like the answer key for the practice. That way you'll have it to do the homework. Okay. So let's see. So we have our 3 inventory accounts. And again, we don't have any beginning balances because this is our first month of operation. So this one's a little bit easier. So we're just actually going to put costs into flow for the month. So for example, on part A, we purchased $168,500 of materials. Well, when we purchase materials, we actually debit materials or raw materials, the $168,500. Okay, so those are materials purchased. The credit, although we're not doing the journal entries, the credit would either be cash or accounts payable, depending on how we purchase those materials. Okay. Part B, it says we actually used $149,250 of direct materials in production. Well, what that means is out of this $168,500, we took $149,250 and put them into work in process. So for B, our materials coming into work in process is $149,250. And that's coming out of raw materials. Okay, so we would debit work in process to show those materials flowing into work in process, and credit materials. For wages on Part C, we incurred $360,000 of direct labor wages. Well, that's also a product cost. So that product cost is going to flow into work in process. So $360,000 of labor gets debited to work in process. The credit there would be like wages payable or salaries payable. Okay. Item D, we incurred $120,000 of overhead. Well, that's also a product cost that flows into work in process. So 120,000 gets debited to work in process, okay, and credited to overhead. Part E says we transferred 600,000 of work in process to finished goods. So these were our total production costs for the month. Okay. Of that, 600,000 goods were finished. So E is going to be a credit to work in process and a debit to finished goods. Almost ran out of room here. So product that was completed and transferred out, 600,000 credit to work in process, debit to finished goods.
So does that inform the debit and credit on the process?
We will have to balance that account. It's unbalanced right now. I don't think there's anything on that. Yeah. Yeah, good question. So yeah, these are just the debits and credits, and then at the end of this exercise, we'll actually balance those to see. They'll have ending balances. Okay. And then F, we sold goods for $875,000. Well, that would be our sales. Okay. So that would be when we like debit accounts receivable and credit sales. So we're not going to show F right now. But G, we sold goods with a cost of $525,000. So when we do a sell, I will show cost of goods sold. When we make a sale, that's a debit to cost of goods sold of $525,000 and a credit to finished goods. Okay. So we debit cost of goods sold and credit finished goods. And then it just gives us selling and administrative expenses. Okay. So from here, we kind of show the different cost flows in the inventory and cost of goods sold, and we'll need that. We're going to balance those accounts later in the exercise. I thought as we were talking about each one, we'll just pop them in there. We want to prepare the March income statement. So again, an income statement is going to start out just like a merchandising one in this case. We're doing a very simple income statement. So what do you think we list first? Revenue, very good. So revenue gets listed first, revenues, and that's where this F comes into play. We sold goods for $875,000. That's our revenue amount. Okay, so we have revenues of $875,000. What do I then do? Very good. I'm going to subtract out my cost of goods sold. Cost of goods sold. Well, I have that on the board here too. It was G. My cost of goods sold was $525,000. I like to put the minus in there, but it's not required. But then we can actually see it coming out. So I subtract those, and what does that equal? $350,000. Good. And what is that called? Very good. Gross profit. So revenues or sales minus cost of goods sold equal gross profit. Okay. Then it's just asking for operating expenses, because my cost of goods sold is all of my product costs. So I'm including labor or materials, labor, and overhead, what was actually used in the period. Okay, so that's where those costs are coming from. So revenues minus cost of goods sold equal gross profit. Then we just plop in our operating expenses. Selling and administrative. So selling expenses minus what, 125,000, and administrative expenses minus 80,000. Again, selling and administrative expenses are period costs, so they're not directly related to the product. So you're looking at like advertising, sales salaries, and then our administrative, VP, CEO, all of their salaries, as well as administrative support, anything to do with the office. Okay, so all those operating expenses are both selling and administrative expenses, and they're also known as period costs or expenses. So total operating expenses, what, 2005? 205,000. I guess I should say it correctly, right? 205,000. So then what's my net income? 145,000. Good. Okay, so again, that's a pretty simple income statement because we already had cost of goods sold calculated. So when we know cost of goods sold, this is very simple and basic. We'll expand it here in a minute. Any questions on that so far?
So when I initially put those on there, I didn't put the negative.
It'll still count it correct without the negative. I just like to put the negative in so I see that it's coming out. It's more for me, like the visual of it. But yeah, you won't, unless it tells you, it'll usually tell you in the instructions, to put a negative in when they want you to put a negative in, which I've never learned their rhyme or reason on when they want negatives and when they don't. But yeah, either way, it'll count it correct. I just like to see the subtraction there. Any other questions on the income statement? This one gave us all of the numbers, right? So it's pretty easy. What it didn't give us, though, were our ending inventory balances. But again, we kind of kept track of them. So we had a debit raw materials 168,500, credit 149,250. So what is my balance in raw materials? 19,250? Yeah, very good. So my ending balance is 19,250. Okay, debits minus credits. Debits are larger, so it's a debit balance. Okay. So we can actually just put that in. Materials are now 19,250. How about work in process?
29,250.
29,250. Very good. That's also a debit balance. So we add up all of our debits and subtract out our one credit. Put that in. And then last but not least, finished goods.
75,000.
Very good. That one's an easy one, huh? 75,000. Okay. So again, I recommend keeping the T accounts as you go through and do these because it'll make it a lot easier, especially when you need ending balances. But in other exercises, we'll have to calculate cost of goods sold. They don't just give it to us. So we really have to keep, those T accounts going. Any questions on that one?
Pretty simple.
Not too bad, right? Yeah.
And if those were for some of the credits, you put a negative.
Not on your balances. Balances will never have a negative. They would just be a credit balance. But you should, you really shouldn't have negative. You would never have negative inventory balances. Yeah. All right. So the next one's just dealing with cost of direct materials used in production. So this one's a short one. Okaboji Manufacturing Company. Why do they make up such weird names? Why can't it just be like Smith Manufacturing? I don't understand. Do it. I guess so, but they're just ruining my life, right? Like trying to pronounce weird names that mean nothing. Maybe it's a real company and I'm just totally dissing them. I don't know, but whatever, right? Okaboji, I think I'm saying that right. We'll just pretend it's right. Reported the following materials data for the month ending November 30th. So they told us how many materials we purchased. They told us our beginning and ending balance. And it says determine the cost of direct materials used in production. So here, all we're doing is working just in materials. But our difference is we don't know what was used and transferred out. Okay. I'll just use my little materials one here. So we had a beginning balance November 1st of 64,900. Materials purchased 490,900. So that's purchases. And then they give us an ending balance of 81,300. Okay. So what we're trying to solve is what was credited to materials. That's all we're trying to do. So instead of taking debits minus credits to get the ending balance, what do you think we need to do? Well, first we need to add our total debits, right? That would be step one. So I add up my total debits. And then what do I do?
You subtract the ending balance, or
Yeah, you got it. Very good. So that's all we do, right? We're just trying to find the credit. So we kind of work backwards. So we add up our total debits, and then we subtract out the ending balance. So how many materials were used in production? Very good. 474,500. Honestly, a pretty basic concept, right? It goes back to college accounting, just balancing T accounts. But we forget. We didn't do as many T accounts in financial. We did them, but not as many. So it just helps to kind of review those concepts on how to balance accounts, because honestly, and especially in the first couple of chapters, that's a lot of the work, is just being able to put the correct amounts in the T accounts and balance them properly to find your answers, okay? So that's how many materials were used. So total debits minus the ending balance gives us the credit or materials used. Again, that's going to flow into work in process, okay? Any questions on that one? Alrighty. Onward we march, right? Okay, so this next one, we are going to do a cost of goods manufactured. Cost of goods manufactured. As you can see on your notes, you actually have kind of a blueprint for calculating this. So your statement of cost of goods manufactured is on your chapter 15 notes. So you can kind of follow that along. As you can see, what we're doing, if you kind of look at it, we're really balancing our work in process inventory, because what we're trying to calculate is cost of goods manufactured, which is this number right here, okay? So we have to balance materials and work in process to get there. That's our end goal, is to calculate cost of goods manufactured in the period, okay? So I'm going to erase these numbers. I don't need cost of goods sold right now or finished goods. I'm going to give myself a little more room. Okay. Like that. So in this exercise, we're dealing with work in process. So it tells us the following information is available in Etheridge Manufacturing Company for the month ending July 31st. It gives us materials used in production, direct labor, the beginning work in process inventory, the ending work in process inventory, and total factory overhead. Okay. So when I'm working, again, we'll put it all in the statement here in a minute, but all we're doing is doing the same thing we did in the last one, really. We're balancing an account. We're just balancing work in process now. So we always start with our beginning balance. Beginning balance, July 1st is 316,400. Okay. So we have a beginning balance. What costs get debited to work in process? Direct labor, good.
Factory overhead.
Factory overhead, good. And direct materials. Yeah, cost of direct materials. So remember, when we're dealing with work in process, all the costs that flow into work in process are product costs. Direct materials, direct labor, and factory overhead. Okay. So we have direct materials of 1,150,000, sorry. 1,150,000. We have direct labor of 966,000. And we have factory overhead, 490,500. And then it tells us our ending balance. Our ending balance is 355,500. So we have all the costs flowing into work in process, and we need to figure out of all the costs we put into production in the period, plus the existing beginning balance, what did we actually finish? Okay, so that's what we're calculating here, is our cost of goods manufactured. Okay, so we're trying to calculate our cost of goods manufactured, you know, also known as finished goods. Okay. So again, it's the same way you balance the materials account, right? You're going to add up all of your debits, subtract out your ending balance. So what is my cost of goods manufactured? Very good. 2,567,400. Okay, 2,567,400. So we just solved it with the T account. Now we just need to put it in the statement. Okay, so we just have to put it in the proper format. So what do I list first in my statement of cost of goods manufactured?
Work in process for July 1st.
Very good. My work in process inventory, July 1st. Well, that's my beginning balance, the 316,400. Okay, 316,400. And then what are my manufacturing costs incurred in the month?
Cost of direct materials used in production.
Very good. Cost of materials used in production, 1,150,000. 1,150,000. What's my next one?
Direct labor.
Direct labor, good. So I'm just following my T account, right? 966,000. So direct labor, 966,000. And my other one?
Factory overhead.
Very good. Factory overhead, 490,500. 490,500. So now we just want to add up those three costs, just materials, labor, and overhead during the month. So what's the manufacturing cost incurred during the month?
$2,606,500.
Very good. 2,606,500. So we just added up our production costs for July. 2,606,500. And so for total manufacturing costs, I'm just adding my beginning balance plus that, which we already did over here. Again, just, you know, did it in a different order, different way. So my total manufacturing cost should be what? 2,922,900. 2,922,900. Okay, so that's all for those debits, right? That's what we did already. Then what do I subtract out? Very good. I subtract out my work in process inventory July 31st, or that ending work in process. So minus 355,500. Minus 355,500. And my cost of goods manufactured, we already calculated. Yay. So we just pop that in. 2,567,400. 2,567,400. Getting alerts on my phone that I'm earning beans at some coffee shop. So apparently my husband used my phone number. It's not fair. I'm like, I never go there. Why is he using my number? It's almost like he's just like rubbing it in, right?
You just gotta go over there now and just use his free points.
I will. I totally will too. He wouldn't care. It's never any fun. You're like, I don't care. Use them.
That takes away from us.
I know, right? Any questions on that? Cost of goods manufacturing? Again, as long as you're doing the T account and you know what costs are flowing in, it's really just balancing a T account. So you have it as the T account and then you have it in the statement format. Now, obviously you could do the statement without the T account or vice versa, right? I mean, you don't have to do the T account, but to me, again, it's just looking at the visual of what's happening to that account makes the statement make sense, okay? So your whole point of a statement of cost of goods manufactured is to calculate this right here, what was actually finished and completed and transferred out, okay? All right, we're already on the last one. What? Of course, it's a long one, right? Okay, so this last one, we're going to take it and do another statement of cost of goods manufacturing. But notice this time, they didn't give us, you know, the summarized data like they did the last time. Last time they told us, you used this many in materials, you had this much labor. But here, they're just giving me beginning and ending inventory balances. They do give me my labor and overhead, but I have to calculate it too. And they give me purchases and all of that. So basically, in this situation, I can't just do my work in process because I need to know my materials coming in. So I'm going to have to balance my materials to get to my work in process. So see how we kind of stepped up to this point where now we have to go a little bit further. Okay. And I think even, and we're going to calculate our cost of goods sold. So we're going to go, this one's going to go through the whole process of all the balances. So in this case, you really do need to use your T account. Okay. So we're going to need materials. Work in process. Finished goods. And we'll go ahead and put cost of goods sold out here because that's what we're calculating. Just to kind of set up my T accounts here. So again, before we try to put it into a statement, I think it's easier to go ahead and put all the costs where they belong. That way we have an idea of, you know, where everything is coming from. So I'm going to start with materials. I'm just going to put in beginning and ending balances on these accounts, so that way we can start working towards it. So on my materials, we have a beginning balance. So January 1 of 180,000. Okay. And then we know we have an ending balance, so I'm going to give myself some room there, of 145,500. $145,500. And then they tell me work in process. I have a beginning balance of $334,600. And then my ending balance is $290,700. $290,700. And then for finished goods, I have a beginning balance of $675,000. And an ending balance of $715,000. Okay. So then, again, in order to do my statement of cost of goods manufactured, I need to know my production costs, right? I need to know materials, I need to know labor, and I need to know total factory overhead. Well, they've given me labor, yay. And they've given me all our factory overhead. They just haven't added it up, right? So we'll have to add that up, but they at least give it to us. We're actually going to put it in one by one, so we'll add that up here in a minute. Let's see. So let's go ahead and look at calculating materials. So what's my debit to materials? Yeah, that's your beginning balance. Good. So we debited that. What else gets debited? Sorry, what else gets debited in the period? To materials. Sorry, I phrased that wrong.
Materials purchased of 1.375.
Very good. Materials purchased during January is going to get debited. So we have 1,375,000 gets debited. That's purchases. Okay. So we had 180,000. We purchased 1,375,000, and we know our ending balance. So how many materials were actually used and put into production? How many materials were used?
145,500.
145,500? Okay. Or no? Wait. You were giving me the ending balance. Sorry, that's no.
1,409,500.
Thank you. Yeah. I'm like, wait, that's not right. Should trust Alec. Do what? Great to know. I just use my Google Maps. Very good. 1,409,500. So again, all we're doing is balancing the materials account. So we would add these two together first to get like a subtotal, right? So all total for the period. Oops, see, I just added wrong. Forgot to carry. All my materials that I had available for use in the period was 1,555,000, and I know I ended with 145,500. So I just subtracted. 1,555,000 minus the ending gives me what was used, okay? So we're just balancing that T account. So we know that cost is direct materials used. So I'm going to put that into work in process. Okay. So direct materials goes into work in process. So we're done with materials. What other costs go into work in process? Direct labor, good. And they gave us that one, right? So that was just the 2,260,000. 2,260,000 of direct labor. And then what's my last cost that goes into work in process? Factory overhead. So to save you time, I'll add it up. So these are all my overheads, factory overheads. So I would just add them all up, and your total factory overhead is 321,600. 321,600. Okay. So now we have all of our costs, right? And we have our ending balance. So we can calculate what was finished, the cost of goods manufactured. Okay. So what is my credit to work in process? How much was finished in this period? That's actually off a little bit. I hope so. 4,035,000? Yes. Yeah. That was close. So our cost of goods manufactured should be 4,035,000. So we added up all of these debits here and subtracted out our ending balance. Okay. So 4,035,000. Everyone see how we got that? Okay. So that's our cost of goods manufactured. And just to kind of finish our flow here, since we need to calculate cost of goods sold, where does this number go? That's cost of goods manufactured. That's what was finished and transferred out. It's what was finished. Yes, finished goods. Yeah. So yeah, remember we're flowing. We calculate materials, that flows into work in process with labor and overhead. We balance our work in process. We're calculating out of all the costs we had in the month, how many goods did we actually finish? This is how much we finished. That flows into finished goods. Okay, so those were completed and transferred to finished goods. So it's just going into the next inventory category. Well, now, right here, these two numbers, we had a beginning balance in finished goods and then what we completed and transferred into finished goods in this period. I could subtotal. I didn't give myself room over there, but So all total in the period, we had 4,710,000 finished products. Well, the next step is to balance finished goods. So we do the same thing. We take our 4 million, I add those two together, 4,710,000 minus the ending balance. That gives me my cost of goods sold. 3,995,000. 3,995,000. Okay. Okay. So we had to balance all of those inventory accounts to figure out our cost of goods sold. So again, in merchandising, we used the perpetual method. We kept track of cost of goods sold. Remember, every time we made a sale, we debited cost of goods sold. So then at the end of the period, we just added up what was in cost of goods sold, and we were good to go, right? But it's not that simple in manufacturing, because again, the biggest thing to remember is each of these inventory accounts have beginning and ending balances. So every period, we have to go through and calculate how many materials were actually used in production. We add up all our production costs and we figure out, well, how much is still in work in process and how much is actually finished. And then we took what was finished and we transferred it into that finished goods inventory, where we still had products sitting from last period that we had completed that just hadn't been sold. So finished goods is just inventory that's complete and unsold. Okay, so we haven't sold it yet. So we added all of it that we had available, subtract out the ending balance, and that gives us what we actually sold. Okay. Everybody, are there any questions? We're kind of taking our time on this chapter just because we'll build on these concepts. And so it's good if you have any questions, go ahead and. Everyone sure they're good? We'll take a minute to pause and reflect now. Okay, so that's our total cost flow, which you have, on your sheet here too. So you can always kind of use this to trace those costs, in the journal entries that go along with it too. Because I believe next chapter we start getting into journalizing those too. So now we just want to put this in statement form. Okay, so again, remember our cost of goods manufactured, we've calculated that number is right here. So cost of goods manufactured is all this work in process account. Okay, so I start with my beginning work in process inventory. Work in process inventory 334,600. 334,600. The next step, I need to calculate my materials used in production. Well, I have, right? That's what I calculated right here, the 1,409,500. I just need to put it in statement form. So we've already calculated the cost of materials used in production, but we're going to put it on this form. So all we're doing is showing this work. So we're going to start with materials inventory at the beginning of the month, 180,000. So materials inventory. The second step was we added in our purchases. So we add in purchases. So beginning inventory plus purchases. Okay, and anytime there's an underline, we know we're doing some math. That gives us the cost of materials available for use. So in this month, we had 180,000. We added in 1,375,000. So all total, we had 1,555,000 available for use. So we've done that first little bit. Cost of materials available for use. Then the last step was we subtracted out the ending balance. So materials inventory, January 31st, I subtract out 145,500. 145,500. So my cost of materials used in production is that 1,409,500. 1,409,500. And again, we know that because we calculated it right here, and that's what's going into work in process. So that's our direct materials used. Well, on this step, what we're doing is we're trying to calculate our production costs. So right here, we calculated this one. We're going to work towards calculating production costs, okay? So we have our materials. What's our second production cost? Of direct materials, then direct labor. Very good. So we're going to put our direct labor in. Again, they're nice enough to just give it to us. 2,260,000. 2,260,000. And then we have our factory overhead. Well, we've already added it all up, but in the statement, we're going to put them all in separately. But at least we have the total. So these are all given. We had indirect labor. Indirect labor, 115,000. Machinery depreciation, 90,000. Machinery depreciation, 90,000. Heat, light, and power, 55,000. 55,000. Supplies, and these would be factory supplies, 18,500. 18,500. Property taxes on the factory, 10,000. 10,000. And miscellaneous costs, 33,100. 33,100. So again, we already added all those up. That's the 321,600. Okay, 321,600. So now we have our direct materials, direct labor, and factory overhead. It's prompting me for total manufacturing costs incurred during January. Well, I would just add those three up together. Okay, and that would be 4,325,700. Okay, just those three costs, just for January. Okay. Wait a second, did I just add up the wrong thing? Just kidding. I should look at my notes better. I added in the 334,600. So that's all. Sorry. The production cost, I should look at the right line. 3,991,100. I apologize. I didn't have that one written on my T account on my notes. So total manufacturing costs incurred in January, materials, labor, and overhead only. I was skipping ahead. 3,991,100. 3,991,100. The total manufacturing costs are the number I gave you first. That's including the 334,600. So all four of these costs, I'm gonna write it up here. That's the 4,325,700. So total manufacturing costs, really what we're doing is we're scrolling up here, we're adding this 334,600 plus the 3,991,100. So 4,325,700. then we took that, the 4,325,700, and subtracted out the 290,700. So total manufacturing costs minus my work in process ending inventory minus the 290,700. My cost of goods manufactured is the 4,035,000. $4,035,000. So that's the expanded statement of cost of goods manufactured, where you're actually showing the materials and the overhead calculations. You know, when we did one before, we just listed cost of materials, direct labor, overhead. It was a little easier, right? So this one's the whole thing expanded. And then last but not least, it asks us the cost of goods sold. Again, we calculated that already, so we just put that number in, 3,995,000. 3,995,000. All right. A lot of numbers, right? A lot of balancing. Any questions? You guys feel pretty comfortable with this stuff so far? It's really not like complex, you know, concepts. It's just keeping track of the costs, right? It's a little more tedious as far as, you know, balancing and keeping track of what goes where. But as long as you understand the flow of costs and understand manufacturing costs in general, this chapter kind of helps us as we go through, okay? Because we're going to take this and build on it. We will use this pretty much most of the semester. We'll use this kind of cost flow. So if you lost your manufacturing cost flow notes, those are on Canvas, so you can reprint them. And then I am recording our class sessions, so I'm popping those videos out there as we do them. So if you get home and are like, what the hell is all of this? You can go back through and watch it, you know, and hear me curse. What? That never happened. I'll go back and edit it, right? No, I won't. Any questions? You guys good? Okay.